Good day everyone, and welcome back to Quest for Alpha. Working as an engineer has taught me a lot of things. Few that I have found critical to my success in the financial markets have been working very systematically, taking complex challenges, complex problems, and distilling them into smaller chunks, smaller pieces that I can attack separately. I have realized that I can use the same exact method when I make a financial investment. And because of that, I was able to create an approach that requires two simple steps to analyze the markets or to analyze a specific stock that I'm interested in looking at. The step number one is to always buy in an uptrend. And this is especially important when we're talking about the stock market, the US market. The second step is to wait for the price to pull back. The price needs to pull back to a specific demand zone, which has a criteria that needs to be met in order to be considered valid. Once the price is in the demand zone, what I wait for is a confirmation. And the confirmation is a set of criteria that I have already outlined in my previous video, for which I'm going to provide a link in the description below. I think what I want to do today is to double click on that method that I discussed previously. I have few stocks that I have looked at. Each has a very specific setup that follows the same approach that I just discussed, the two-step method. And I think just going through a charting platform like TradingView, I can provide a little more detail about my train of thought, about how I go about analyze a stock and how I go about making a decision whether I want to enter the trade or to stay away. Now, of course, other than a charting platform, one would need a brokerage account. In my case, that just happens to be Robinhood. And you see, these two platforms, TradingView and Robinhood, are so well designed that together with my approach, I don't really need to use a laptop. I can do the analysis on my phone. I have plenty of time to do the analysis because of the daily and the monthly timeframes that I use for my strategy. And it is just straightforward, doing the analysis and waiting for the confirmation and then deciding whether I want to enter or not. With that being said, let us go into some of the setups that I have for today. But prior to that, if you're interested in content like this and you want the algorithm to send you back, please consider subscribing to this channel or liking the video. Okay, so let's start going with the first setup, which I have here for Micron Technologies. The first step that I do is I go onto the monthly chart. I have an indicator here that you can easily find in TradingView. It's the EMA, the 50, the 100, and the 200 close. I mean, you can see I'm not trying to hide anything. That's really the only indicator that I use. This is the indicator that helps me determine whether the stock is trending upwards, sideways, or downwards, and I'm mainly interested in stocks going upwards. This is the 10 EMA, this is the 100 EMA, this is the 200 EMA. You can see that they're all aligned in an ascending order, so 10 being above the 100 being above the 200. That to me is a clear indication that this is in an uptrend. Now, when I was looking at the stock, I obviously wasn't there. I was somewhere in this region here, and you can see that even then the stock was trending upwards. It did have a nice pullback, and remember, the first step as always is working in an uptrend. So the second step is wait for a pullback into a demand zone. And what is that demand zone? Well, demand zone is a zone where in the past we can see a significant interest from larger financial players such as banks and institutions, where they have decided to take the market higher, to pour money into this specific stock, in this case Micron Technologies. And we can see that by having large consecutive bullish candles being created, that is the criteria number one, followed by the fact that they have taken a previous peak. So this run, this bullish run, had taken a previous peak, and that peak just happens to be here. When you take a look at this and you mark the zone on the less bearish candle, so the less bearish candle is really right over here. What you do is you wait for the price to come to that level. Once the price comes to that level, you have effectively utilized the two-step approach. Now you need to go down to a lower time frame. In my case, it'll be the daily time frame, and wait for a confirmation. So in this case, the price came down. It was pretty stagnant here. I mean, you can see that this is very sideways market for some time. At some point, the price took all of this liquidity here, reached below this sideways market, got to the zone, and at that time, it started to rally up. Now, I don't show any interest here. What I wait is for the price to come above the 200 EMA. In this case, that happened right over here. What I do in that situation is I need to have another confirmation. I need to see that there was some sort of sideways market, some sort of consolidation happening. And as you can see, there is a significant consolidation in this area. So I can mark this area. Hopefully it's visible. If it's not, let's just change the color very quickly. Get blue. Change it. Transparency. There we go. Transparency. So we have a consolidation. We have the price above. The confirmation happens when the price gets above and departs from the consolidation, obviously upward. So we see the next candle. You can see that this is a significant candle right above the consolidation. This is a trigger for me, boost of confidence that I should enter the trade and participate, put money behind it. So you have plenty of time here. This is one candle is obviously one day, so you can wait for the closure. You can wait for the day, the following day when it opens. You can wait even one extra day if you want to just have an edit confirmation. One thing I can warn you is that sometimes the price can pick up and depart, so you may have to start somewhere here, and then ultimately your risk to reward may end up shrinking significantly. This is why the management of the trade, the entry, setting up the profit and the loss are super important, and what they require is truly a consistency. If you decide you are always going to put a stop below the consolidation, then be consistent with it, be disciplined. If you decide that you're always going to put a stop below the lowest point of the move over here, then do that consistently. I don't think there is any wrong answer here. You just need to be consistent, because if you try to change the way you apply the stop loss, the way you apply the profits, this is where you would see a huge impact to your profits or losses overall. So in my case, the reasonable stop loss, which is not a fixed stop loss, it's just a marking on the chart that helps me visualize where I would consider closing my position, would be below the consolidation, and I would target at least 2-to-1 reward to risk. So we can see how this thing actually played out. This was actually an amazing setup, and it was picture perfect. You can see that this reached the target. At that point, you can decide what you want to do. You can close the position fully. You can close only 50% of the position. You can just let it run and maybe move your stop loss to a break even. Then let's see what happened. For me, I exited here at a 2-1, and then let's see what happened since then. The price actually reached here. It didn't really touch the break-even point, but the price is now trading almost at $223, which is a gain of 117%. And this just happened from June to end of October. So in less than 6 months, there was 100% gain on micro technology. Let's take a look at another setup here on ASML, which is something I would invest without even using this strategy, because I just like the company and like what it stands for. I actually worked over there. So if we look at on the monthly time chart, we can see using the indicator that this is in an uptrend. So you can see the 10 EMA being above the 100 EMA and the 100 EMA being above the 200 EMA. At that point, what we do is for a significant pullback to a demand zone. That demand zone happens to be this one right here. Let's change it to blue so it becomes a little more visible, and change the transparency. There we go. We see a strong bullish run taking a previous high, and then at the same time it also took this one too over here. So this to me became a valid zone for those two reasons. At that point, what we do is we wait for the price to come down to that zone, the demand zone, and we wait for a confirmation. The confirmation needs to happen on the daily time frame. If we go to the daily time frame, we can see the price reached the zone, it started bouncing up, but the price never really went above the 200 EMA. So it went a little bit deeper in the zone, taking some of this liquidity. So you can see, as you saw on Micron Technology, there was a pretty significant consolidation here. The price decided to go below it, take more liquidity, go deeper into the demand zone, and it starts to rally up. At that point, it rallied right above the 200 EMA. At this point, if you remember, what I'm waiting for is some sort of consolidation. The consolidation needs to happen in this region here. Generally, it would be ideal if it happens around the 200 EMA, but even between the 200 and 100 EMA, if there is a consolidation and the price departs, it is something I would be interested in. So in this case, this is a consolidation that happens, and I can see the price breaking out. At this point, I can decide to enter the trade. Long position. And then it's up to you, again, where do you place your stop loss and where do you place the target. In general, I want to target 2-1, at least 10 to 15% gain. Then let's see what happens. You see that the price went below here, but not significantly. It didn't really push all the way down. It decided to spend some time below this consolidation. This was not a strong enough reason for me to pull out from the market. See that it rallies up, and then look at this. Let's take a look at what is this gain here. The highest gain was around 37%, 35%. And then that was also from June of this year all the way up to the end of October. Let's take a look at Caterpillar in this case. Let's go into the monthly time chart. And let's kind of go back here in the past. What we can see here is that the three MAs are aligned in an ascending order, so the 10, 100, the 200 indicating an uptrend. What we now look for is a demand zone where the price should be pulling back to. And in this case, you know, what could argue maybe that there is a demand zone here in this region, because the price, when it pulled back, it did have some strong bullish candles. Yes, this is a pretty long wick, but you know, one could argue that this is a demand zone, and that's okay. And then there is a much stronger demand zone here where you can see the candles being a lot stronger, and a lot more of them actually surpassing a previous peak. So in this case, this demand zone surpassed this peak, and then right over here it surpassed that peak. So in that case, what we do is we wait for the price to come down to that zone on the monthly time frame. Now that we are in that zone, if we go to the daily time frame, we can see that there was never really a confirmation to the first zone. You see that the price collapsed and it reached the second zone. At that point, we wait for the price to rally up above the 200 EMA, which just happens to be here. And remember, we are waiting for a consolidation. There was a consolidation here, but this to me is too far away from the 200 EMA. This just happens to break out of the 200 EMA and start consolidating. So that's what we're looking at. Clear consolidation and a breakout above it. It just happens to be here. That is one day. A second day, you have like 2 days really to make a decision. 2 full days to make a decision whether you want to participate or not. In that case, for me, a soft stop loss would be somewhere below the consolidation. There's a gap here. I mean, you can drag this a little lower if you want, and ideally target something that is 2 to 1. And then let's see what happened. Yeah, that was a pretty good run actually. And then the price rallied even more now that we are in October, end of October really. Price had rallied up 65%. So pretty good setup, I would say. Let's take a look at something that may not have worked very well, like MGen. We can start with a monthly time chart, and these things can happen, right? Let's go back to this region here. What are we looking for? Step number 1 again is making sure that we're in an uptrend, so we can see that the EMIs are aligned properly, 10, 100, 200. Then we look for a demand zone. What is a good demand zone? Would you consider this a good demand zone? You know, there's plenty of wicks over here. There's not a strong push above this previous maximum, previous peak. So for me, that was not a good demand zone, but previously these 3 candles were pretty strong, and those 3 candles actually took out this previous peak. That for me was a strong indication that this is a good demand zone. How do we mark it? We take the less bearish candle and we draw the zone. So we can change the color here. just in case we are unable to see it clearly, in blue, and we move down to the daily time frame. You can see that the price reached the daily time frame. At that point, we wait for the price to come above the 200 EMA, which happened here. There was really no significant consolidation in this area. We are going to now wait to see if a consolidation will occur. And one could argue that this was a nice consolidation here, and that the price did go above the previous peak, which was here, right? So it's not only a consolidation. I mean, if there was already a previous peak and the price dropped, what you typically want to do is you want to wait for a significant move, something indicating that yes, that there is really an interest to move the market higher, to push the market higher. And in that case, one could decide to participate here. Let's see what happened. This is also a pretty significant departure from where the stop would be. So it's not the most interesting setup for me personally, because I would be looking almost like a 10% loss. So I need to make 20% on this move in order to feel comfortable. So I think this is going to break down, but let's take a look at it. I think it will be a good example to see. And yes, the price actually broke down, which is okay. These things will happen. So what we do is we wait for the price to go above. So the price did get above here. You can consider that this is some sort of consolidation being formed, and then the price came below it. So let's keep that portion and let's see what happens here. More of a consolidation, and then broke out from that consolidation. There is another place. This is actually when I was looking at the stock and I decided to enter. Again, you can set your stop loss somewhere here. That's like a 6-7%, aiming for a 2-1 somewhere over here. And then let's see, this is the price did get below the consolidation, below this soft stop limit that I had, but not really significantly. At some point somewhere here where I see that there is really no interest, the price tried to go up, came down even below those levels. This is where I would say, yeah, I'm no longer interested in this. I don't want to take the time for the price to rally up. And as you can see, the price did go a little bit higher, but there was such a long consolidation where I decided to exit the market, and this was actually a loss of almost 8-9% of my investment, compared to some of the gains that I got on the other stocks that I covered today. So I hope that this analysis provided a little more depth into the strategy. There's going to be wins, there's going to be losses. What I have found with this, that there is definitely a lot more wins than losses, and more importantly, with the risk to reward being 2-1 or 3-1, this is more than enough to consider that this strategy is a profitable one. Going forward, what I'd like to do is look at setups that I have entered in the previous weeks or months and review how they're progressing, and then to also go over certain setups that I am considering investing in, but I'm still waiting for a confirmation to occur. With that, Thank you again for your attention and have a great day.